Hi everyone, Get Coach Jake back with more hot news. And DoorDash, after a new round of funding, just raised $600 million and a valuation of $12.6 billion. Yes, I said billion. It does not stop. How is this going to affect everyone else? GrubHub, Uber Eats? We'll see. But let's take a look and get some more information on this before we discuss this more. So here's the article of Forbes.com just done today. Like I said, DoorDash is now worth $12.6 billion after a new $600 million investment. So let's read what the article says. The investor feeding frenzy around food delivery startups hasn't stopped. Just 3 months after raising $400 million, DoorDash confirmed it has closed another $600 million with New York City hedge fund Darsana Capital Partners leading the round. That's an extra billion in its war chest so far this year, and half of the total of $2 billion raised for the San Francisco startup since its founding in 2013. That's a lot of money to play with, right? And top of the money that they may or may not be saving in delivery pay. The new funding round increased DoorDash's post-money valuation from $7 billion to $12.6 billion, according to co-founder and CEO Tim Xu. Now, they're looking to go public soon also. They announced that they're putting in for IPO. We'll see what happens with that, but I would imagine that they have a good potential for doing pretty good because of their rise in market share and everything. Now, the biggest reason why GrubHub's market share, or actually their stock has gone down, is in direct relation to their market share going down. So let's read on a little bit further here. This allows us to pull forward to the future sooner, Zhu tells Forbes. It's helpful to raise capital, especially when the macro climate seems to be a bit choppy. Great examples, Uber and Uber Eats. They've raised so much capital. Look at what they've been able to do in all the years. That external turbulence has shaken some of DoorDash's competitors in what's already a cutthroat market. Tensions around U.S. and China trade talks have put the markets in a precarious state, affecting stock in publicly traded GrubHub, 2018 revenue $1 billion, only profitable gig company to date. Postmates, which announced that it had confidentially filed to go public in February, still has not made its filings public or started an IPO roadshow. Uber's public debut in early May was disappointing, to say the least. Shares are trading below its initial pricing, but Zhu isn't shaken, even after seeing Uber or other consumer tech IPOs falter in the public markets. Short answer is that it hasn't had an impact on how we thought about our business or how we've thought about future, Zhu says. Investors clearly haven't been spooked either. Last week, Amazon announced it was leading a $575 million in London-based Deliveroo, bringing its total funding to $1.5 billion. Now, I have a video coming right after this one, breaking that one down and talking that, and how that relates to the U.S. market and what it may look like in the future there, with Amazon really putting a lot of money into the food delivery side. Now, again, this is the UK on that. Capital accrues to the winners in markets that people think are growing, says, I'm not going to say the name, a board member whose firm has invested every round since the Series A. You don't just get money because lots of money is in the system. 3 years ago, it didn't look like DoorDash would become the delivery darling. In 2016, DoorDash raised a down funding round after investors lowered the share price and a slew of other delivery startups failed in the months following. That's changed. Now DoorDash's market share has surpassed Postmates and Uber Eats in the U.S. Uber Eats operates internationally and did $1.48 billion in revenue in 2018 globally. There's no doubt that it's a competitive environment, Lynn says. They've shown that they can come from behind and win. They're super aggressive in their approach, right? And everybody's wondering, how they grown so much? Their marketing is crazy aggressive. DoorDash now has an extra $600 million in firepower to continue gaining market share in the U.S. and Canada. GrubHub should be worried. The only two markets in which it operates. Zhu won't disclose revenues, and his company still isn't profitable. But he says the company's gross bookings run rate in March was on pace for $7.5 billion, which indicates gross bookings in March were around $625 million. The information previously reported the company planned to raise capital in addition to Darsana, new investor Sands Capital, and existing investors Coatue Management, Dragoneer, DST Global, Sequoia Capital, SoftBank Vision Fund, and Temasek Capital Management also participated. Zhu says the money won't be going into fueling a price war with his rivals. He'd rather focus on market expansion and what he calls DoorDash's next billion-dollar business, DoorDash Drive, which delivers for business like Walmart. Our growth has not come on the back of any discounts, he said. I think that's why investors have continued to approach us in excessive fashion since the beginning of 2018. Now, this is huge. We've all seen what these companies can do when they have some money to play with, and what DoorDash has already been able to do with the money that they've been given. So, for those that hate DoorDash, I mean, I hate to say it, but they're here to stay for a while, and they're really making a push. Now, I've seen some positive things on some of the pay, but the pay model's still crap, right? We still get $1 delivery pay. Let's hope that maybe that they have some more money, then maybe they can bump that up a little bit, right? With some driver loyalty and driver retention, they have a better chance at giving GrubHub a run for their money. So, this isn't necessarily a bad thing. Now, we know DoorDash for who they are, but we've also seen some positive things. Now, I'm optimistic. I like to hope for the best, but I'm also a realist and understand what the potential is with these companies and the future. So, just like keep you all informed, I hope if anything, this was entertaining. Have fun, be safe, and as always, work smarter.